Hello and welcome to Project Trade. It is the trading highlights show and we are looking at a technical trading strategy. For this strategy we'll have two indicators signaling our trade entries, nothing too overtly advanced. First up we've got the 200 period exponential moving average. It's looking like this, a slow moving price assessment that we're hoping gives us a concrete view of the long-term price direction. We've gone for the exponential moving average to increase the weighting given to the more recent price data, which may prove useful with such an extensive look back. And for our second indicator, we've got the Bill Williams masterpiece, the awesome oscillator. It's a zero line crossover and it's calculated by simply subtracting a 34 period moving average from a 5 period moving average. I know, my mind was blown too. Genius. So the histogram bars themselves just measure the difference between the two moving averages. You can't change any of the inputs apart from the colors of the histogram bars, so you take it as it's given to you. There are more detailed videos on both the awesome oscillator and the EMA linked in the video description, but let's find out how we're going to use them for our specific entry criteria. For the 200 period average, we're going to use it as a basic filtering system by saying that if price is closed above it, then we're only going to take buy trades. And if price is closed below it, then we're only going to take sell trades. And for our awesome oscillator, it will be an entry signal when the histogram value closes across the zero mark. So we will enter a buy trade if it closes above zero and the EMA clears us, or a sell trade if it closes below zero with the EMA giving us the go ahead there. And just to clarify this, it is only when the awesome oscillator initially closes over zero, after that first histogram bar only. For example, if the awesome oscillator closed below zero, but price is still above the EMA, we are locked out of that move permanently. Even if on the second histogram bar of the awesome oscillator, price closes across the EMA, satisfying that criteria, we will not take it, as we will assume that we have already missed a key part of the move. It is quite strict to not allow it any time at all to catch up, but we're doing it to avoid a lot of trades in those times when price is ranging up and down in the whipsaw, churning around, constantly crossing the EMA above and below it. Here's some example entry signals that we would take. For both those buy signals there where it crosses above zero on the awesome oscillator, we've got the price also above the 200 EMA, so we're happy to jump in on those. Then over on the right you can see when the histogram crosses below zero, the price too has closed under the EMA, so we'll be able to get in a sell trade there. We're also going to have to manage our money somehow, and I don't think that we can just rely on the awesome oscillator for that as well. So we'll lean on our good friend, the average true range indicator. Here's what it looks like. It's one of those single line oscillators and it's measuring volatility in the market. That figure in the top left, that's the ATR value, and it is the average price movement high to low across the last 14 candles. We can then use that value to determine our stop loss and take profit levels. There's an example of what it looks like on the price chart with levels set out at 1 times the ATR value from our entry price for that take profit and stop loss. You can see how utilizing these sort of levels can give your trades space to maneuver, but it isn't going to let them run forever. That's the ATR basics, so how are we going to use it in the strategy? First off, we're going to split our trades into 2 sub-trades each. Classic trick. Subtrade A, that's going to be a 2 times average true range value for the stop loss and just a 1 times ATR value for take profit. Looks and sounds psychotic, maybe it is, but we are trying to see if we can get a high win rate and snag quick profits when we do get in those trades. Since we're using trend indicators though, we do want to give it a chance to try and run to the good, so our subtrade B will be using a trailing stop loss, which will also begin at 2 times the ATR value from our entry price. Each of those subtrades will be at a 0.5% capital risk for a 1% risk total per trade. Also, if the awesome oscillator line recrosses zero, that will be a signal for us to close the trade. But we won't close the trade just for the price reversing across the EMA, because again, we don't want to get caught out too much in a range. We have enough risk management here already. It's all going down on a 15-minute time frame, and we're going on Forex in a battle of Europe versus the Pacific. With the 15-minute time frame, we don't want to be stuck with just one chart because we may have to wait a very long time for a signal to come. So we will be looking at 3 separate pairs. And we also don't want to jam our risk up too much using the same currencies but just with a different counter currency. So we are going for 6 unique currencies within our 3 pairs. It'll be the Euro Aussie dollar pair, the New Zealand dollar Swissy pair, and the pound yen, aka the guppy. Everything will go in the journal because we do like to learn from what we try, so we'll recap through that after some trades. I've got pretty mixed confidence in this one, but let's see how we get on in the trading platform. Just coming up to 9:45 here, and we've got our 3 charts pulled up. On the left, we've got the Euro Aussie dollar. In the center, we've got the New Zealand dollar Swiss franc. And on the right, we've got our pound yen pair, that guppy there. All of them with the 200 exponential moving average and the awesome oscillator pulled up. And it looks like on all three of them during the Asian session, we would have got some good profits. If we first just look at the Euro Aussie dollar, and let's zoom in, we can see we would have got in at the start of this one. It is coming to reverse now, a low there of about 50 pips, so almost certainly would have been profit for us there. Now let's have a quick look at the New Zealand dollar Swiss franc. Just looking at this bar, yeah, that was a little bit positive there, so we would have got in at the start of this one. Not that it really matters if we got in at this one or that one. So our ATR would have been 5 pips, so we would have had profit taken there almost immediately on the one trade. And then the other one would have gone all the way up here and then come back down 10 pips. So that'd be about there. A lot of profit to be had there. And finally, let's just have a look at this pound yen over here on the right. So here we can see we would have entered right at the bottom of this candle there and got in on that run up about 25 pips to the top there. We definitely would have been able to take profit on our first sub trade. Definitely then in the Asia session, good runs on all these pairs. Hopefully we can see that replicated in the London session. But at the moment, it could actually be a while before we get into a trade. All these are going to either take a good time to get back across there and get back across the price, or they'll have to cross over and then cross back. Here's most of our economic calendar. I say most because we can't actually fit it all on one screen. There has been quite a considerable amount going on today. Not going to be able to touch on everything, but let's skim through some of them. Japanese unemployment rate is just a little bit of a beat for them there, 2.8% against 3% forecast. Industrial production month on month though, negative 1.5% instead of the positive 6.7 forecast. Really disappointing for them there. Over in China, manufacturing and non-manufacturing purchasing managers index coming in a little bit weaker than expected. Manufacturing 50.1 against 51 expected, and non-manufacturing 47.5 against 52.8 expected. So that was a bit of a miss. Building approvals month on month, a lot less than expected in Australia there. That's a negative 8.6 instead of a positive 6 that was forecast. France's consumer price index, the inflation measure, that came in worse than expected, 0.6 inflation against the forecast of 0.3. Yesterday, it was flat over in Germany. It was 0.0% against 0.7%. As I said then, I think a lot of the central banks will be preferring a slower rate here. France would have preferred a 0.1 or a 0 flat, just to slow it a little bit, as there are a lot of people getting on edge about inflation at the moment. France on the euro again, their GDP quarterly and yearly coming in about as expected, a little bit of a beat on the quarterly, 1.1 against 0.9, but the yearly coming in on the nose. Although their consumer spending is down quite a bit, negative 2.2 compared to 9% forecast. PPI as well there, month on month France again, really big miss, 1.3% instead of 0.6%. So that could mean more CPI coming down the line for them if the PPI is up now. And so that's everything that's happened so far. But what does the rest of the day hold for us? Just under an hour, 10:55, we'll have the unemployment rate coming out of Germany on the euro. Is that going to affect us on our euro Aussie dollar pair? It might a little bit if there was a big miss, but I can't see anything having a major impact there. Germany, the biggest economy of the euro, but still one of many. It'd have to be a drastic miss to suddenly change trend direction or put a big move in. Then we got plenty coming out of Italy throughout the midday as well. 11 o'clock, their GDP quarterly. 12 o'clock, CPI coming in month on month for them. As well, at the same time, you've got the Eurozone CPI coming in as well. That's them as a whole. So that one will certainly be interesting to watch. And then an hour later, Italy put out their PPI as well. So how much inflation are the producers facing? Mid-afternoon, this stuff, India, Brazil, South Africa, not going to affect us at all. Doesn't really have a major knock-on effect, even if they were to miss or beat by quite a margin. And as we get to the end of the day, we've got those North American numbers coming through. Canada first at 3:30, GDP, the monthly, the quarterly, and the yearly all coming in. So that'll be impactful for the Canadian dollar, which we're not trading, so we won't see any impact from that. Very unlikely. Still though, Justin Trudeau called that snap election coming up next month, so possible that he might be able to brag about these figures if they were quite a beat. Not that voters want to hear about GDP. You could say the economy is doing well. Between 4 and 5 o'clock then, a drip feed of 3 US dollar numbers, HPI composite 20 year on year. That's not going to have any impact on us at all. 4:45, the Chicago Business Barometer. Again, even though it's on the dollar, not likely to have an impact. If we were going to see an impact on one of our non-US dollar currencies, it would likely be from the Consumer Confidence Index. And back in the Eurozone, 5:40 p.m. in Germany, we've got the Bundesbank Executive Board member Morderer making a speech there. Could have an impact, could have an increase on volatility, but I would say it wouldn't have much movement over the price there. As you can see though, there will be quite a bit of a drip feed of information coming throughout the day, starting with our German unemployment rate in 54 minutes now. Let's get back onto the chart and see where our technicals are. Not a lot of change, but some of this stuff is going in the right direction for us. So if we look at the outside pairs, the euro, Aussie dollar here, price coming up, that's what we want to see, because we want to see a zero line cross either above the price or see it come back down. We don't want to go the whole day without a trade. But as you can see here on the New Zealand dollar Swiss franc, these awesome oscillator stretches can really last, each of these bars, 15 minutes. So that's an 8-hour run so far it's on. Maybe it'll go another 8. Over on the right, Great British Pound Yen, almost the reverse of the Euro Aussie dollar. Price coming back down, and we're hoping for the reverse. We want that cross over price and over the awesome oscillator. Ideally at the exact same time, giving us identical signals would be perfect. Not that there's anything wrong with not taking trades, because jumping in can easily just cost your bank balance. Let's face it with optimism though. Let's believe that we are going to get that trend, and maybe it will come. Just coming up to 11 o'clock now, we are expecting these German unemployment numbers to come out. Price doing exactly what we want it to on these outside charts still, moving upwards on the euro dollar towards the moving average, towards that zero line on the awesome oscillator, and then the reverse on the pound yen. It is coming down, and quite sharply. Hopefully it doesn't cross the awesome oscillator before it crosses price, because that will not be an entry signal for us then. We'll have to wait. Germans getting back to work then. If we are going to see an impact from these unemployment numbers, it would be slightly beneficial to the euro, which is what we would want. They're down to 5.5% unemployment compared to 5.8%. Just a couple minutes after that, quickly chasing, we got the quarterly GDP coming out of Italy. They were bang on with their forecast. That is 2.7% growth on the quarter. This awesome oscillator is coming down quicker than the prices. So hopefully it crosses zero and then comes back over to resume an overall trend. Hopefully this is just a retracement and we can get in on a reversal upward. Same on the euro Aussie dollar, the awesome oscillator. The increase on that is definitely outpacing the increase on the price compared to the moving average. That 200 average has got a long way to go still. So maybe we want that zero cross and then the reversal back over for a continued sell-off over here and a continued buy-in on the pound. The clock strikes 12 and we do just about see the zero line crossover occurring on the pound yen. Price, of course, comfortably above the EMA, so we won't be able to get an entry signal off that even if it does close over. It just comes positive again though. It's really floating the line at the moment. But let's have a look at these inflation numbers coming in. Italy a little bit hotter than expected, 0.5 against a forecast of 0.1. When you see the forecast for the total Eurozone, they've predicted it's actually going to be deflationary. Yeah, I didn't think so. Core CPI coming in there at 0.3% against a forecast of negative 0.4. And they've got the standard CPI monthly forecast at negative 0.1. It's probably going to come in at least 0.3 or 0.4. Let's just wait for that one. And there's the CPI month on month coming in at 0.4%. Very optimistic for the forecast to think there would be a deflationary environment with what we're seeing out and about in the world. So we just jump back into our charts though. The crucial period that we're seeing here is going to be on the Great British Pound Yen. It's very choppy changey. If it closes beneath zero, suddenly we are on alert then for it coming back above the zero line and us getting a buy signal. Let's zoom in on it here. If it just starts to trend upwards again here and doesn't cross below zero, obviously no entry signal per our system. But it could be approaching for us on that pound yen, the guppy. That awesome oscillator, it does remain above zero on this pound yen pair though, which means we continue to wait for a zero line crossover to see. Price quite volatile the last few periods. Now again on the guppy, price comes down a lot And we do actually see this time that the awesome oscillator is quite a bit below. If it closes like that, that will be a crossover. Price still above the EMA, so not an entry for us, but it does get us a step closer. Just after 1 o'clock now, pound yen awesome oscillator continues below zero, but the price has come back up, so we might see it go up in that direction and get a crossover to the buy side potentially. We've also almost got a crossover here on the New Zealand dollar Swiss franc in the middle, going across that zero, very close there. If price comes down for a couple more periods, that will certainly happen. Non-entry signal for us, but just like with the guppy, gets us closer to getting back into a potential buy trade. It's the last of our European numbers coming in as well. Italy's producer price index forecast at 1.5, so already quite a bit expected. If the CPI from today is anything to go on, the PPI will be even more than that. Shouldn't have any impact on the euro though. We haven't seen any of these CPIs really make any adjustment at all with the movement. It's just stayed very rangy this whole time, even though it missed forecasts by quite a bit on some of them. Yeah, and it does come in higher than expected. 2.1% on the month-to-month PPI for Italy. Not good to be that high, but hey ho, is what it is. Just gone 2 o'clock here, possibly these signals getting a little bit closer as we crack on through the afternoon. There could be a zero line crossover coming here on the euro Aussie dollar, but if it does come, it's likely that the awesome oscillator will cross before price gets above the EMA. So that would be no signal for us there. Let's wait and see what happens. Price has pushed a lot the last 30 minutes or so after this range here. Came up a little bit in this wedge pattern and then did break above it. Meanwhile, New Zealand dollar Swiss franc, very rangy there, not much in the last couple hours at all, and it continues to just float around above. Even if it floats to the downside on the awesome oscillator, a long way away from that average still. Price making moves here over on the pound yen. We should get the entry. It's likely that there's already enough momentum if this is where it closes, but we are very early into the candle, still 13 minutes to go thereabouts. And we're also seeing the zero line crossover on the euro Aussie dollar over here as well. If price could get up enough and close over there, that would be an entry signal for us. But if it doesn't, and the awesome oscillator closes like this, we will be stuck out of that one. At that point, we'd really be looking for it to sell off and get back below the zero for an entry there. And we do miss out on that euro Aussie dollar trade as the awesome oscillator just closed above zero, but price still below zero. We can see, let's get on this Great British Pound yen pairing and we'll zoom right in. And you can see the bar is just ever so slightly above. The value at the moment is 0.0039. So if it closes like that, or if it closes anywhere above zero, that is our buy signal. So for the first time today, we are looking at a potential entry here. 2 minutes until the close of this candle, and it does look as though we're just going to sneak in with a zero line crossover at the moment. So let's pull up our ATR. Currently sat at 10.6 pips, so if we were using that, twice the risk, 21.2 pips to our stop loss. Okay, here we go, and we are going for 10.6. It's better to go for the full candle there, because this one, you see it drops immediately, but that's because it doesn't have a full set of data for the candle. So we've got that 21.2 pip stop loss. There's our risk on screen now. We're going to get these two sub trades open. And there we go, we are in both of these with a 0.5% risk, 1% risk total, or around about $80, just over that. Stop loss for this first trade, as we said, 212. Take profit, just the 1 times ATR value. Going to try and get in there quick and grab those profits. So there's that one there. Now with our trailing stop, if we go and put it on as a trailing stop right now at 212 points, so we say, okay. It's not actually going to set it straight away because the system, it doesn't want to set it until you go that far into profit. So for now, we are going to set it just also at that stop loss there. What we'll do, if this take profit triggers, we will trail this up, so then it'll only be 1 times ATR behind at that point. And then once it gets 212 points or 21 pips thereabouts into profit, that's when the trading stop loss will automatically take over. That's if we get that far into profit. We can close down this ATR. It does feel good to get into a trade now at least. Took about 5 hours into the session, a little bit longer than usual. They are slightly off from one another as we missed out on the entry by 1 pipette, even though we were pretty sharp on it. Price heading pretty sharply towards our stop loss here. Can barely see that take profit level there at all. Let's Still can't see it. Let's zoom out a little bit. Can see it there a touch. Still not. There we go. Wow. So for it to take our profit, it has got to get to a level that it hasn't actually been to in the last 2 weeks. Just above this sort of area of resistance here. Hence why we're seeing price come down quite a bit and edging ever closer towards our stop loss there. Very tight, and there they go. Both stop losses triggered. That is a 1% loss. Let's pull up the trade, see exactly where we got in. Yeah, and it was basically right at the very top there. All of this was enough momentum to get the awesome oscillator from under to back over, but it just took 2 candles right at the open of the New York session, and we have been wiped out here. Whether it bounces off this level as support is yet to be seen, but even if the awesome oscillator closes across, we will need price to be below the moving average for it to signal us in. Still $82 down for the day so far, just after that one trade. A lot of waiting to get knocked out right away. This is what I mean here. If we go on the pound yen again here, let's zoom in and we see awesome oscillator crossed well below zero. If price has got enough gumption in it to move past this and close beyond there as well, that will be a sell entry signal for us. So we'll have to watch that one closely. Not too much on the other ones, although we are seeing price plummet on the New Zealand dollar over the last few periods here against the Swiss franc, and similarly the Australian dollar getting weaker, the euro on the move here as it gets above that average now. But let's get back on and have a closer look at this pound yen for a bit. And so what had looked unlikely now seems almost a certainty, as we've got 2 minutes before the close of this candle. We're going to get a double cross here, across from the EMA and across from the awesome oscillator, both on the same period. I don't know how we feel about this entry. There has been a lot of downward momentum already, but we are absolutely going to take it. So let's pull up that average true range indicator. And with 45 seconds to go, the ATR is giving us a reading of 11.6 pips. That is what we will go for with our risk management. And there we go. We are ready for entry here with our 2 sub trades. You can see our risk calculated on screen now. And there we go, we're in. We missed them by a pipette again. We try to be quick with it, but still miss out. Let's have a look. Our stop loss then. 232 there and 116 there. That's just 1 ATR value for the take profit. And this one will be our trailing stop loss trade, which we will manually move along. For now, we'll set it at 232 for the stop loss. So you can see that there, the stop loss and the take profit. Let's see if there's more momentum left in this. Could easily see it rebounding. Price coming back up against us as soon as we entered there. If anyone was curious about the Canadian GDP numbers, how they came in, the month on month was a good beat. 0.7 actual against negative 0.2 forecast. Same with the quarterly, only negative 0.3 actual compared to negative 1.9 forecast. Although they did miss the year on year with only 8% actual against the 19.5% forecast. Generally though, not too bad a numbers come from them. Anyone trading on the Canadian dollar might see that going a little bit stronger if the banks want it to. Price had made a move towards our stop loss, but now currently just hovering a little bit kind of close to our entry price, but still in a losing position at the moment. Let's just have a look at those 3 charts. New Zealand dollar, Swiss franc, price in the awesome oscillator still coming down, but still above the EMA. And we've got this awesome oscillator on the Euro Australian dollar comfortably moving along above the zero. So no signal for us there either. Let's get back onto that pound yen. That's where our action is. Definitely looks like it's making its move for the stop loss now. Price on the rise. And there goes one of them. It didn't go that extra there. It does though. Knocks them both out. That's another full 1% loss there. So let's have a look. Let's pull that trade up. So there we go. That's where we got in, right about there. And you can see the run up started. We did come close to getting into profit just about here, but alas, that hard run up came and did knock us out. We don't want to let it run too far. We did give it 2 times ATR value stop loss. Maybe we should be thinking that 3 or 4 is a better go of it. Even when we put our take profit at 1 times ATR, it hasn't moved even half a times ATR in our favor. So at the moment, we just have to keep trying with the signals that we're getting, see if we get something better outside of the range. We might get enough momentum here that the awesome oscillator crosses back above here and price gets to about here, and maybe we get in a buy trade right at the resistance level again. We'll see how that goes. Price coming down sharply on that pound yen chart over here on the right. You can see it knocked us out up there, right at the top, and now it's coming back down. Here it comes. 10 past 5 now, no signals on any of them. Price continuing to come down a little bit on the pound yen there. And we've just pulled up the economic calendar to have a look at these US numbers. Chicago Business Barometer and the Consumer Confidence Index both missing by quite a bit there. The barometer 66.8 against the forecast 70.1, and the Conference Board Consumer Confidence Index 113.8 actual versus 128.5 forecast. So not the best numbers there for the dollar in terms of the environment out there for business. And we've continued to see an increase in volume as these numbers have come out across the afternoon here. Look at that, the last hour and a half or so really reaching peak volume on all of these pairs. Just turning 6 o'clock now. That volatility on the pound yen, it does continue. It's been very spiky these last couple hours. Really, really rangy. And now this candle's turned red again there. So it doesn't look like we'll be getting that buy trade soon. The New Zealand dollar Swiss franc could be a buy signal coming up over the next few periods if it really pushed hard. It's fought back a lot against that momentum in the last few periods. And in the reverse manner on the Euro Aussie dollar, could be a sell trade coming against the euro if some red candles start coming. Last few periods it's pushed back. I do still think it will be a little bit before we see a good entry signal, so we are going to call it there for today's session. We just had those two losing trades stuck in the range, which you can see over here on the Great Pound Japanese Yen, but we will try and regain those losses with a good trend tomorrow. Let's just quickly wrap up this session with those two trades in the journal. There is our journal for the day then, with the two trades, both of them on the Great British Pound Japanese Yen pairing. We got in that buy trade. There was a little bit of steady upward momentum. It was still kind of in a range, and we got in there, but it turned out that that was the resistance level. It bounced off there almost immediately, went down and down pretty quickly, to be fair, over the next few candles, and knocked our stop loss. So that was the first trade, full 1% loss there. Nothing we could do with the trailing stop loss at all. And then that downward pressure continued, and it immediately got us into a sell trade. Both these coming late in the day, by the way. And again, it reversed, flipped up, whipsaw manner, and just knocked us out right at the top of what would become a really volatile range. Each candle was basically going up that full high to low. So really nothing we could do about that. It was just a case of we weren't able to find the trends. The trends seemed to happen in the Asian market last night, all three of them in a trending environment. Today, no signals on the New Zealand dollar Swissy or the Euro Aussie dollar. And then the signals we did get here on the pound yen, they were in a range. They were not the trend that we wanted. So we do end the day $165 down. Let's hope we can get some of that back tomorrow.